With so many Forex pairs to choose from, it helps to have a certain look in the market that you seek out for an opportunity. And the same can be said for other markets. However, Forex, it's extremely scalable for traders of all account sizes. It makes scanning charts a quick exercise when you have a trade plan that outlines setups and the conditions that need to be present. Seriously, you need a trading plan, and if you don't have one, you have no doubt put a roadblock up on your trading success. Now, there are so many things that you can look for, including a multitude of patterns and indicator positions. I like to keep it simple by looking for markets currently taking a pause in the trend direction. Now, pause, it's not a technical term, but it simply describes ranges or pullbacks with a resolution. It does not mean there is no buying or selling taking place. Trend is, of course, time frame dependent, and since I'm looking for swing trades, I generally focus on the daily, weekly charts when looking for structures and overview. Trades are usually executed on lower time frame charts, but with the bigger picture in mind when placing stops and targets. Now, important here, it's not just the pause, but also what happened before the pause. A little confused? During one of my scans, I noted that the Euro-US dollar had what appeared to be a selling climax on the daily chart. The move stood out, and that's what brought me to investigate further. Now, it happened as this currency pair is in a downtrend on this particular chart. I fully expected price to pause, or a correction, and work off this move before returning to the downtrend. Now, if there were no other trading opportunities across other markets, I may have been tempted to trade the corrective move. Given the selling climax, though, I felt that the climax would be filled in a complex correction, so there was plenty of room for the trade to move. To be honest, though, if the first pause, that's shown with the red arrow, actually pulled back a little further and was cleaner, I may have 4-houred an entry. The daily chart shows more of a range than a pullback, and I was on alert if price was showing an indication that the downside break was close. This chart is the 4-hour chart because the details, while can be inferred from the daily chart, they're better shown here. Now, the gray area is the range, but as you can see, price is holding highs and the lows are getting higher. This buying pressure at higher levels points to an upside break. The yellow arrow shows a smaller range near the highs, which is a sign that the break will be to the upside, not short. 180 pips later, this breakout to the upside ends. Now the expected move has completed. I had to rethink shorting at this time due to structure that was now printed on the chart. Number one, the range prior to the breakout had me wondering if the buyers that came in at the range would hold prices if it returned. After 4 days of pause plus the break, it appears there's strong interest in the buying department. And number two, were sellers absorbed at this level, leaving little selling interest? So given that information, shorts did not appear to be the play at this time. The plan was to sit aside on the first move when or if selling pressure took over the market. So price broke to the downside and it held up right at the breakout level, as you can see here on this daily chart. Now, a few things come to mind. Will this spook those that are long, causing them to exit and drive price down? If price breaks the bottom of the range and stops are hit, will I have missed a great entry? Will those who missed the breakout trade the first pullback long? For details, let's head back to the 4-hour chart. Price rallies, but it fails to hit the previous high, showing a lack of buying pressure. Price heads into a range, it's better seen on the 1-hour chart, and an order to short is entered at 14.15 in error and then re-entered at 14.67. Now, all of this work, it's done pretty quickly, but it takes a trade plan and knowing what you're looking for to make it work. So let's break down this trade. Looked for something new, and I saw the sell climax in the EU. I expected a correction and would look to short the return to the trend. The structure of price was not a clean correction. It was time to rethink the execution of a short trade, taking new information into account. The high probability of the move short being held up at the breakout level. Expect late buyers to enter and bring price back up. Or look to short any sign of weakness. Now, the trade plan I follow outlines what I'm looking for when scanning. Each individual trade has its own trading plan because while setups may look the same, they can act very differently. Reassessing new developments for me is key to deciding whether to pull the trigger or not. So how did this turn out? The trade triggered 6 hours later, and after some price drift, it broke and it didn't look back. Now, this type of trading relies on some discretion, but it's also pretty rules-based in terms of what to look for. The truth is, this type of trading evolved from system trading. Now, I bought my first real trading system in 2008, and no surprise, it was from NetPicks. It taught me about rules and following a trading plan instead of just knee-jerking into every large candle. It had me only taking strict setups and taking risk seriously. And I believe that it helped shape my thought process about trading overall. And probably most importantly, it taught me about being consistent. And without consistently taking the right actions, you will fail. So take a look at trading systems here on NetPicks and learn more about what's offered. And for an in-depth trading education, also take a look into Premier Trader University.